Hi everyone. Today, let's talk about the economic calendar. Then we'll go over the SPY options for the end of the week. This is the third week of the month, so it is an important options close. Then we'll go over the charts. Then we'll do a quick reminder of my positions going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the economic calendar, durable goods, fairly interesting. Pending home sales, always good to see. A couple of Fed governors talking, one on Monday here. Then we have Fed president here on Tuesday. I usually don't pay too much attention to those, but they seem to be saying more and more here recently. Retail inventories, I'm actually fairly curious about that. Inventories have been high, but it seems like retail sales has been quite good here recently. So that'll be interesting to watch. ISM manufacturing, always interesting. And then jobless claims on Thursday, a couple of Fed governors here, and then ISM services here on Friday. Moving over to the options here for the SPY, highest call volumes sitting at 420. And then we have the highest put strike here at 390. Lots of options in the market, 1.1 million for the Friday close. This is the third Friday of the month, so it is quite a lot. Put call ratio sitting very high at 2.7, but max pain is still at 405, which would be about $10 of upside from here. Probably not going to close below 390. Very high put wall there. Do have a strong put wall here at 405 also. I don't know necessarily that we can make it that high, but definitely not going to go higher than 410 in my opinion. Wouldn't surprise me if we finished right in this little valley here at 401, 402, 403, somewhere in that zone at the end of the week. Would not be surprising at all. That way, some people still make a little bit of money, but most people don't. Looking at open interest, similar thesis here, 395 high put wall, 395 calls also sitting in here. It is interesting here that on the open option interest, we have a 400 call wall. So that's worth paying attention to. Maybe we finish just below 400 and above 395. Which would be not a very big move from where we are right now, sitting maybe at 397.50, but we could get into this 401, 402 zone where all these puts expire worthless. These 400 calls, though, would make a little bit of money, but looking at the amount of money that they would make, it's not very much on the call side, way more here on the put side. So pay attention to that going into the next week. These guys are probably not going to make money, and price is probably going to drift towards the calls, in my opinion. Moving over to the charts, starting with the S&P 500 on the monthly view. The month isn't closed yet, but it does not look good currently. If we did close like this, you would expect at least another month of potential downside. But you can see we are at this trend line that we've been talking about on the shorter time frames. This is that uptrend line that we started. We had that initial low, the second low here, and then that bounce up to the 21 EMA here on the monthly view. And now we're also retesting that longer-term downtrend line as a potential support. So we broke out, found a high, we're retesting support here, and it's certainly an area where you could find support into the next week. And that is my current thesis going into at least Monday and Tuesday. It seems like we're going to at least get a short-term retracement. I also added VWAP here to the S&Ps. It's currently sitting at 40.15 here on the monthly view. So we're just below that at 39.70, indicating a potential downside. If we do break through these two levels, then you're going to be looking for a potential retest of these much lower lows at the 55-month moving average, which is currently trading at 34.63. Moving over to the weekly view, you can see that weekly close is not great. Once again, it needs to bounce now if it's going to bounce off of this trend line. There is the 21 EMA trading down here at 39.23. It certainly could move just a little lower to retest that moving average and then get the bounce. But looking at it right now, just from a candlestick pattern, it does look weak. Momentum is fading here. Of course, we had momentum fade going into that last spot as well, where we had 4 consecutive weeks of downward momentum. And here we've basically had 2. So these two are very similar in momentum levels. Then we had 1 and 2 steps down. Certainly could get at least another step down, or maybe we get another doji style week at the trend line, and then you get the continuation to the upside, maybe back up to this upper level of resistance at 4,300. That would be very powerful, and that would act as a continuation of this trend. But right now, you do have to look at this as a potential rollover position. That would be looking for a price target back at this previous low, down around 38.33, if we do not get a bounce from here. And just to highlight the daily chart here just for a moment, we talked about this on the Friday video, but it does make sense. So you have the 144 and the 200 SMAs in this zone, right at that trend of support. on the S&P 500, and you can see this daily close was a pretty weak close, and it looks like a potential for an island reversal and a retest of the 9 EMA, which is currently all the way up at 40.62. Maybe this comes down slightly on Monday. We get a push back up to that 40.40 level, which would be a pretty decent retrace. Moving over to the NASDAQ here on the monthly chart. Moving over here to the NASDAQ on the monthly chart, you can see the monthly close looks very weak if we were to close the way that we are right now. We're still sitting just above the 9 EMA here, so slightly bullish area for bounce. Currently getting stuck between the 55 and the 21 here, just like the S&P 500. But we do have that longer-term trend line sitting at that same zone. We touched it just barely, and it looks like we're getting pretty clear rejection. Again, we have that longer-term downtrend line where we could get a bounce and a continuation. So we have the breakout, retest, and then the push higher, certainly a possible scenario. But this monthly close, if it were to close like this, does look very weak. And we only have Monday and Tuesday to lock out that monthly close. So it's definitely worth paying attention to. If we end up closing something like this, you should expect the next month to be very bearish. And then we would be looking for a retest of that 55 EMA, which is currently trading at 10,096, at 10,960. Moving over to the weekly view, you can see we had the first step down here on the NASDAQ, pretty substantial step down as well. So you would expect it to continue. But just like the S&Ps, we have multiple levels of support here. Go a little bit lower to test these on the NASDAQ. And we have the 144, which was the area where we first got rejection here. So maybe we get one more week, come back down and test this at about 1160 at the 200 SMA. That would make sense. And if we do get a bounce, the highest I would be potentially looking for is the 55 EMA, which, like I said, is trading at 12,380. And then looking at the daily chart here just for a moment, very choppy move down, lots of buying happening during this move. And then we had that PCE move from Thursday to Friday, and then that doji looking like a gap reversal type scenario. And like we talked about, potentially getting back up to that 12,300 level, which also correlates with the 9 and 21 EMAs here. So it looks like we're in kind of a consolidative period, finding some support in these previous SMAs and EMAs, but also getting across here on the 9 and 21 EMAs, pointing to more potential downside. Moving over to the Russell here on the monthly view. Similar thesis, you can see that retest of the trend line and 21 EMAs acting as resistance. Momentum on the monthly chart looking slightly bullish. A little bit more bullish here on the Russell actually compared to the others. We did come back down and almost retest this previous longer term trend line sitting at 1850. So just a little bit below where we've touched already this month. But similar to the other moving averages, but similar to the other indices, you can expect a little bit of a bounce from here, at least in my opinion. And momentum here is supporting that. And you can see the RSI is also moving up, and it is above the SMA here on the chart, so it looks a little bit stronger. And we're above all of the EMAs here on the Russell monthly, except for the 21, which is also interesting. Jumping down to the weekly view, you can see what that looks like, testing that 9-week moving average, but also stuck between the 9-week and the 144 EMA. All the other EMAs are to the downside, indicating a potential uptrend, but we did rejection that previous trend line as well as the 144 EMA. The Russell actually looks a little bit stronger here than the other moving averages, but similar to them here on the daily chart, we did have a little bit of a step down on the MACD. And if this is going to be uptrend, you would expect it to be like this, where you could get one week of downside potential, come down, maybe retest the trend line, some of these other EMAs with another week of down move, find support in this zone, and then that would be a longer term support similar to this, where you then get continuation of the trend. Moving over to the Dow here on the monthly view, I do want to highlight this volume profile. I'm experimenting with a couple of new indicators, and this seemed a little bit interesting to me. So you can see there was a lot of volume done here in 2018, 2019, and your strongest level here on the Dow is all the way down at 253. And there's not a lot of volume done here between 275 and all the way up to 325. Basically an area where there was very little volume. And if it does break down from here, usually you would expect that that's going to continue fairly strongly until we get into these higher levels of volume. That was traded really between 240 all the way up to about 265 here on the monthly view. So that's pretty interesting. Like I said, I'm still experimenting with these new indicators. But usually when you see a big disparity, price tends to move through the area fairly quickly until we find higher volume areas and longer term support. So keep that in mind. Otherwise, the thesis here is not very different. Monthly chart looks very similar on the Dow. Looks like area where we are breaking down from. Very strong resistance level, in my opinion. Certainly could find short-term support here at the VWAP and the 9-month moving average, which is trading right around 325. Certainly an area where you could get a bounce and a retest of the trend. Momentum on the monthly view is actually stepping down here on the Dow, which is definitely not something that we've seen on the other indices. So do keep that in mind. We also have the 55-month moving average trading down at 297. If we did move down from here to reach that, that would be pretty substantial, around a 10% down move. That would also be retesting the October lows, fairly significant here on the Dow. The Dow does look much weaker than the other major indices, so do keep that in mind. I do have the money flow index on my RSI chart. Again, still learning this indicator, but it does look very weak compared to the recent price action. The last time that we were this week on the money flow indicator, we were all the way down here December through August of 2015 and 2016. Where you can see there was a lot of volume done. Moving over to the weekly chart, similar thesis, lots of wick reductions that we're coming off of, pushing down into these potential support levels, looking probably down at around 323 here on the weekly view. You can see most of the volume on this lower time frame was done between 340 and about 327. We're getting pretty close to breaking below this higher volume area. And like I said before, once you break below that, then you start to get into this lower volume region, and it's fairly quickly, kind of like what we saw here, going from all the way up at 323 all the way down to 287 in 3 consecutive weeks of really strong downward movement. Then we found that consolidative period, and we had a really strong push up here on the Dow. So definitely interesting, definitely something to watch, but it seems like we might be breaking out of this higher volume area into this section of lower density. You can see momentum is turning bearish. Of course, this was a very strong weekly close. Of course, we had something very similar here on the first week of December. We ended up getting another week of down movement into this zone where we are right now, and then we bounced off of that level. So certainly still supported at this level, but like I said before, it does look fairly weak here on the Dow. And just to reiterate here on the daily chart, just for a moment, you can see lots of downward momentum. It does look like an island reversal setup, touching the 144-day moving average, get a bounce, retest these EMAs, which are pretty much all to the upside at this point. Maybe come up, retest 335, and then you would expect rejection at that point and a more violent move down, in my opinion. Moving over to the ratios, starting with the SPX here, divided by the M2 money supply. This is one of my favorite charts. You can see on the monthly view, momentum is still picking up to the bullish side, very similar to what we had here where we swung up pretty significantly. You can also see what that looks like coming out of the 2008-2009 dip where we had a swing up, a little bit of a dip, and then a continuation in some bullish price action. So right now, momentum does point to the bullish side on the monthly view. But like we said before, we had rejection from this previous trend line. We've talked about this before. Does look fairly weak on the monthly close. If we were to close like this, you would hope that this is going to bounce if you are bullish going into the end of the month. Get a nice doji on the monthly close, which could signal a potential continuation or a retest of this previous high. That would obviously be very strong. But right now, the way that it looks, you would expect another month of downside potential and a previous retest of that most recent low. Obviously, the price levels are a little bit different on this chart, and that's part of why I like it. It seems like that would be a decent level to retest. Could certainly go lower than that, but it doesn't look like it's going to, at least currently. Moving over to the daily chart, you can see this is starting to wedge up a little bit. We have this upper trend line. This move higher did not make a much higher high here, and it did break down quite substantially. We are in an area of support here. If it's going to bounce, you would want it to happen now. But momentum on the daily chart is quite weak, and it does kind of look like we're breaking below this trend line on this specific chart, which again is one of the reasons that I like this chart. Certainly could come in and retest the 144 EMA and 200 SMA, find some bounce, and then get back into the zone, retest the highs. That would be a very strong move. Certainly possible. But right now, you do have to respect the fact that we did get a substantial move down. We're in a kind of a wedge, and it does look like we're breaking down at least a little bit. Moving back to the weekly chart just for a moment, I do want to highlight, remember, we're in this zone here, which is an area we've been in multiple times before, basically throughout 2008, 2009, and we're just above the level that we were at here in 2014, 2015. And again, that's why I like this chart. It really gives you a more relative perspective in terms of price action. We're in the same zone that we were from July of 20 all the way up to January of 21. And this zone could hold for many years. We're actually slightly below the area that we were in 2018, 2019. And we went sideways throughout that period for 2 years. So doesn't mean that we have to break down and that we have to move lower. We could certainly chop in here for many years. And until we start to see an increase in the unemployment rate and earnings start to drop off pretty significantly, I think that's a good thesis going forward. Moving over to the NASDAQ divided by the SPY, this looks very weak. We're at resistance, still chopping within this zone, but momentum turning slightly bearish here. You would expect another week of downside potential. And if the NASDAQ is leading to the downside, that usually means that markets in general are going to be leading to the downside. You can see we did make a higher high compared to this previous high, did retest that longer term downtrend line that we've been watching. And last time we did that, we had a very long continuous down move here on the NASDAQ versus the SPY. So do keep that in mind. If this does roll over next week and we're going to get the longer term down move, basically that means you need to be shorting the NASDAQ and trading the SPY to the upside if you are bullish. And that'll give you a little bit better chance of making money in either direction. But overall, in terms of the market, if the NASDAQ is leading to the downside, that usually means everything is going to be moving down. We could certainly come down and retest the 9 and 21 EMAs. We did a cross here on the weekly chart, shorter term bounce at this previous level around the 2.95 zone, make a higher low, and then if we get the continuation, that would be very bullish for stock. So right now on the weekly chart looks bearish. It's like we're going to get another leg down this week. So bearish on the NASDAQ versus the SPY, but we could find support here 295. And if that did come to fruition, we make a higher low here and we can move up maybe all the way to 3.11. That would be a very interesting move and a situation where we could be pretty bullish on the markets for the next few weeks. Moving over to the SPY divided by the Russell, you can see the Russell here outperforming. This looks weak. Looks like we're moving lower on this ratio. So we have the SPY outperforming the NASDAQ and we have the Russell outperforming the SPY. So it looks like the Russell is the strongest here. Jumping down to the weekly view, you can see this looks like a wick rejection and a potential move down to this 204 to 206 zone back at the 21 and 144 EMA and SMAs. Definitely worth watching. That would also be a consolidative zone where we had many wicks to the upside around this 201 area. That does look like a strong level of support as well. So keep that in mind. If we do get into this zone, it's probably going to get back to this previous support level, indicating that the Russell is potentially going to look strong over the next few weeks and might actually be the strongest out of the three. Moving over to the SPY divided by gold here, this looks like a pretty clear wick rejection and a slight down move. If this continues next week, that's obviously going to be bad for the SPY, and looks like gold is going to be doing fairly well over the next week at least. It's worth noting that we did still have bullish momentum on this chart, despite the consolidative area that we had. There's a very strong impulsive move to the upside here for the SPY, and certainly could find buyers if we do come back down into this 2290, 23 level, and could make a slightly higher low back at the previous low that we had here at the end of October. Of course, this is still a longer downtrend, and we've been respecting this upside. We didn't even get all the way to the trend line, so that's pretty weak. You would expect to move down in the next week. And then, like I said, this 23 level, if that doesn't hold, then you're looking for a retest of the 22 level, indicating that gold could be outperforming over the next couple weeks. Moving over to the transports here on the weekly view, it's good to look at these longer term because sometimes you lose perspective in terms of where you've been here recently. You can see we have this very long-term trend line, did mark the bottom at the end of December pretty perfectly, very close to that level. You can see multiple wicks here and it acted as support as well. And right now we have a channel that is acting quite strongly. We threw multiple wicks through this level, kind of overshooting this downtrend, retested support, retested resistance here, found support at that lower trend line, pushed through that longer term downtrend line, and now we're testing resistance at the upper end of this channel, and we're rejecting from there. But based on the weekly chart, it does look like we could get another dip downside, retesting the bottom of this channel down around 220 or 221. Maybe we overshoot that just slightly to retest the 200 SMA here on the weekly chart. But right now, you have to respect this channel on the transports. But once we get into this zone around that 220, 221 level, you should expect to find some support. And then we're going to be looking for a potential upswing in this channel, which could indicate higher prices on equities. So you do have to respect that right now. Short-term bearish, but potentially long-term bullish into mid-April. And it could be a fairly substantial push back up to this August high here if this channel does continue to stay intact the way that it has here recently. Moving over to the daily chart, you can see similarly we're at the previous low. We've tested that resistance. Does look like we're finding a little bit of support here. You would expect a bounce, maybe test this previous high here at 232, 233. So get a little bit of consolidation here, retest these highs, maybe overshoot it just slightly to get a little bit of downside liquidity. Then we come back down into that 222, 220 level, retesting support, and then you get a continuation up to retesting the previous high and maybe even making new highs here on the transports. So it does look slightly bullish over the next 2 days. Then we could get that bigger drop if it's met with sellers. And like I said, I do expect these long-term trends to support down at that 220 level. Moving over to semiconductors here on the weekly chart, you can see we're still in this channel, very similar to transports, retested the upper trend line here, and we're moving back down into a zone of support. That 229 level is sitting down here, multiple EMAs. We're above all the EMAs here on semis on the weekly chart, so it does look quite bullish. Looking at the new indicators that I'm watching here, you can see we have VWAP sitting down here at 228, certainly an area where we could find support. Basically, you have a whole bunch of EMAs sitting in this level around that 228 zone. And looking at the most recent volume profile here, you can see the area of confluence is right around 225. Most of the trading was done in this recent consolidation in June. Did overshoot just slightly to retest that trend line. Certainly possible we could see something like that here, where we overshoot these EMAs just slightly to retest the trend line, and that would push you back down to that 222, 223 level. But it is worth noting that there is an area of strong volume. You can see this bar. There's a lot of volume right here. Certainly an area where you could find some support. If you do push through that 226 level, then you have to assume that you're coming all the way back down to the area of confluence right around that 205 zone. And that would obviously be a breakdown of this channel and would be a pretty big move from where we are right now. So do keep that in mind. Moving over to the daily chart just for a moment here, you can see similar to the other charts, very choppy in this zone. Pretty sneaky with that big bullish candle we had pushing us back into this range and then gapping below the trend line. Very interesting. The majority of the volume was traded back in November at this 227 level on the shorter time frame. So it makes sense that we came down, tested that trend line and pushed back above that level. Then it pushed back into this previous zone, got through this level of lower volume. Like I said, if it breaks down here, could certainly go back to this previous area of support. And you have the 9 and 21 EMAs here to the upside and the VWAP, which is actually pretty heavily correlated here with the 21 EMA on the daily chart, which does point to more downside potential coming into this zone, which does support the thesis that we could come back down into this 225 to 229 zone and then find support there if it's going to happen. And then we get a continuation back up to the trend line right in that 260 zone if we did make a new high. Moving over to the dollar here on the daily chart just for a moment, you can see we've had 4 consistent weeks of bullish momentum. Momentum here stepping very strongly down, looking to turn green here in the next week or two, which is the first time in quite a while. We haven't been in green momentum all the way since October of 22. If we do get a continuation, that'll be bad for equities. You do have the 21 EMA sitting up here at 106.03. That would be pretty strong resistance. That also has confluence here with this trend line sitting right on top of it, going back to this previous downtrend area. We had the wedge. We broke out of the wedge. Strong move higher here. In that 106.03, 106.10 area does look like strong resistance. So maybe we get a little bit bigger push up here, get a wick rejection on the weekly candle, find some support back down around the 103.25 level at the 9-week moving average. And then we establish that higher low. And then we get a bigger push up, maybe all the way to the 109.50 level. That would obviously be very bearish for stocks. Something to watch here on the dollar. Slight push higher, get that rejection, make that higher low, push higher, which would give you that potential for a little bit of a bullish move on equities back into resistance. And then once the dollar starts moving higher again, that would be very weak for equities and maybe pushing us back down to those most recent lows that we talked about. Finishing up with the charts here on the VIX. On the weekly chart, you can see we've been watching this channel for a while, marked multiple tops and bottoms here. Last time we had a wick rejection at this level, we had a very consistent down move. Obviously, this was from a much higher level than we are now, but it is worth noting that we did get a wick rejection on the weekly chart. Momentum is still bullish, which is interesting, but we do need to watch this closely. Certainly could get a rejection back into this 20 zone, retesting the 9-week moving average, sitting at 20.01, certainly a decent level for a potential support. We're at 50 level here on RSI, so certainly another area where you could get rejection. So keep an eye on this closely. To me, it makes sense that we come down, retest the 9-week moving average, and then push through this level of resistance back up into the 27 level. That would be on this trend line that we were watching, which correlates with these other trend lines. Does seem like a possible area of resistance. We do have this previous level here at about 28.75, which is very close to what this trend line will be at if we do come down and then push very strongly through there. Obviously, that would be a significant move for equities to the downside, so we'll be watching this very closely and updating in future videos. Moving over to my accounts here, you can see I am slightly bullish. I do own some shares here in the IWM and the SPY. Like I said, I don't really want to be trading the NASDAQ to the bullish side. I do think it's going to underperform based on the ratios. It could certainly change, and I'll make sure to update you guys on the daily videos if that does happen. But right now, the NASDAQ looks weak, so we have the IWM and the SPY to the bullish side, and we do have covered calls on both of those. Looking for a little bit of a push higher in the short term. Not a ton of deltas here because these are covered calls here. You can see 187 call and 296 call. If we do get stronger pushes higher, I can certainly roll these out or reestablish my positions going into Tuesday if it does look strong. But like I said, I am expecting some resistance and rejection from those higher levels if we do get the push up early in the week. Let me know down in the comments section what you think of the charts, or if there's any charts that you would like me to go over. I only do the longer time frames on the Sunday videos, so definitely check out the Friday video if you want to see some of the shorter time frames, or the daily videos we go over the much shorter time frames, so definitely check those out. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great week.